There we go. All right. Let's move that here. Let's bring that here. Almost there, folks. All right. Let's one thing left to do. Good morning, everybody. Hello, hello, hello. We got Omar, we got CJ, we got Brian. Good morning, Brian. Happy Friday, everybody. Sassy Trainer, Charlie's in the house. Dave, Richard, Robert, Glenn, Armulfo, Dave, David, Dennis. Good morning, Dennis. I hope you got my email back yesterday. I did respond back to you. Ivano, Darren. Good morning, everybody. I hope everybody's doing great. We got Manuel, Patrick. Good morning, Cam. JB, Rick, Dr. Serena, Henry, Deanna, Jesse, Rice, Blair, Wade. War Dog is in the house. We got Tim, Richard. Good morning, Richard. Michael. Good morning, Michael. Patricia, and happy Friday, everybody. Tom, Art, Robert. Happy. Ooh, Friday the 13th. You know what? Ooh, you're right, Bob. I had no idea. I forgot all about it. It is Friday the 13th. Whoa, spooky. We got Wayne, we got Todd, we got Edgar, we got Scott, we got Don, we got Jeff, we got Chris, we got Roddy. Good morning, Roddy. Good to hear from you. Good to see you, actually. I wish I could see all of you guys at the same time. That would be a lot more fun. Richard, Colleen, Brian. Oh, notepad's ready. Let's set a record. Thumbs up, everybody. Yeah, let's set a record. I like the way that sounds, Cam. I like that. Michael, Kevin, Carlsbad. What a beautiful place. What kind of weather you guys have in Carlsbad right now, Kevin? Let me know. I'm curious. Steven, Dave, Travis. I started a minute or two earlier today. I'll give the room a few more minutes to fill up. It is Friday. Fridays, people like to hang out on Fridays. It's a fun day. Good luck for us and not the market maker, right? Yes, I agree with you. I agree with you. Frankie, good morning. Good morning, everybody. Yeah, it's Friday the 13th, right? Wow. All right, so a few things. I'm going to have my there's going to be the A line. It's going to be the last time we're doing the A line at 1 p.m. today. It will also be broadcast right after this, after I'm done here today. So if you want to see it at 1 o'clock, you could do that. You can also see it at 1 o'clock. You can also see it right here after I'm done here after the hour. Josiah, my assistant, is going to broadcast it, and then we're going to do it live again and then we're going to do it live again at 1 p.m. for the last time. We've had 22 winners in a row. We haven't closed a single loser since July, which is when we launched the program. I'm targeting the 23rd win, and I'm going to show you how you can apply this game-changing tool to your own trading. Also, join me in my VIP room today at noon. I'm going to be talking about. Do you guys want me to give you the topics? Here are the topics for the VIP room today. I got some good topics for you. We're going to talk about why I love the A-line so much, and I'm going to give you a couple of demos. How to identify strong trending stocks that are on the move. What sectors to lead into end of year. Why watching the relationship between major indices is vital. A lot of you guys don't do that. I'm realizing right now. Does retail have any more firepower? More downside for home builders, or are we going to pull back? Who called that Lenner home LEN right out of the ballpark? And fastest moving stocks during the second half. That's what I'm having in store for you. Hey, Peter, how are you? Hey, Dr. Serena, thank you so much, and welcome and happy Friday to everybody here. Hey, Angie, good to see you. I was thinking about you yesterday. I didn't see you here all week or most of the week, so wanted to say hello to you too. If I don't see one of you for a few days, I start thinking about it. Like, what happened to that person? I hope they're okay. But hopefully you guys are getting ready for the weekend. Yes, hopefully we all profit today. So let me tell you guys something funny before we start. My father-in-law, he's a really great guy, and he turned 75 about a week and a half ago. And he told my mother-in-law not to tell anybody because he didn't want us to make a big deal about his birthday. So we all forgot his birthday. Now, my mother-in-law, I don't know why she listened to him. So today we're going to have a makeup party for him at my house. We usually get together at my house. My house is the most convenient one out of everybody, so we usually get together here. But His name is Bruce, and we're going to celebrate his birthday tonight. But like, if you ever tell somebody not to tell anybody about your birthday, does anybody ever do that? Like, who listens to that, right? So we all feel really bad about not congratulating him and not celebrating his birthday. So we're going to really embarrass him tonight. Also, here's the link for the Cam and Gustavo show, and we're going to get started right now. Let me just get that out here. It's the funniest thing. Good morning, Eduardo. Good to see you. Yeah, he does. He knows about the party. He didn't want us. I don't know. It's like all of a sudden he didn't want to celebrate his birthday. And it's like you don't have a choice. You're going to celebrate whether you like it or not. I'm October 29th. 29th. So yeah, reverse of what he really wanted. Exactly, exactly. Because we want to celebrate his birthday. Late again, third day in a row, but good morning. Good morning, Wilford. Good morning, Justin. Good morning. People are just coming in. Hit the like button, guys. We get more love from YouTube that way, and I think the algos like it too. Thank you, Dr. Serena. Yeah, he's still 75 years old. Exactly. All right, so let's begin. A lot to talk about today. A lot to talk about today. So you guys see this move in the Nasdaq? I'm eerie suspicious that this may be, and again, people are going to be this. Let's just say I don't want to say this is the top because I have no idea, but this is a very, very unnatural move in the Nasdaq. It's really, really strong. If you guys have Nasdaq stocks this morning, I suggest you take profit because this is a little overdone in my opinion. And let me explain to you why I'm very skeptical about this number. I'm very skeptical about this number because look at momentum levels. Look at the number of stocks. The number of stocks rising, getting above the 50-day moving average is declining as we're going up. Yesterday, we were at 60%. We only have 57% of stocks trading above the 50-day moving average, and 200 only 60. And if you come over here, you could see that only 49% of stocks, folks, 49% of the S&P 500 is trading above the 50-day moving average. 49%, not even 50. Okay? 49%. Good morning, Ange. I already said good morning to you. 8 years since we dug it up. Something not flowering. Need to check the entry pipe. Ooh, wow. Be careful here. Be careful here. So be careful here. Be careful. Be very, very, very careful here. We're not even firing. We have an 8-cylinder car, and now we're firing on 2 cylinders. Okay? Now, look at NASDAQ 100. 54% of stocks are trading above the 50-day moving average. Only 62 are trading above the 50-day the moving average. Meanwhile, the NASDAQ looks like this. I mean, that's a trend right there. All-time high on low volume. So I am really, really nervous about the upside here. It doesn't seem like there's anything contributing. And if you look at the mags, you will see that the mags did not make an all-time high yesterday. And today they're not higher either. And look at the volume on mags, guys. Look at the volume and look at the volume the last few days. So to me, this is very, very bothersome. This is very bothersome. Now look at RSP. It looks like somebody's trying to really look at the broad market right now. Do you guys see that? To say we have divergence would be a gross understatement. This is very unnatural, and this is very, very bad for the market. This is very, very, very bad for the market. I'm going to say this again, folks. This is 497 stocks. 493 stocks. And this is 7 stocks. Look at the volume the last 3 days in comparison. Did we have earnings yesterday or 2 days ago on Microsoft? No, we didn't. We didn't have earnings on the mega cap stocks, maybe one. This looks to me like somebody's aggressively trying to buy these stocks at the expense of the market. So here's my question to you. Yeah, let's take a look at QQQE real quick. Thank you, Rich. See that? I mean, it can't even get it above the 8-day EMA. So this is really, 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 this is really, really bothering me. This is really bothering me because here's my question to you, okay? What happens when whoever's buying these mags stops? What's going to happen? Look at the Dow. I'm kind of moving a little forward today because I find that this is really important. Come on, guys. There's 319 people in this room. How about a couple of thumbs up? And if you're watching on Telegram, you can go to YouTube and give a thumbs up and go back to Telegram and watch it. So look at the Dow Jones. We're below. Let me just move this line here. We're below the election levels. We're below the 8-day EMA. Look at Russell 2000, which I'm going to talk about today in the VIP room quite a bit. Look at the Russell 2000, below the election level, below the 8-day EMA. Look at equal weighted SPY. I don't want to get into that entering or exiting volume mark. That's too granular. It's a good question, but it's a little too granular. But this is not happening, and we're below the election level VWAP and the 8-day EMA here too. Okay. If mags give up the ghost, we will drop down to the 8-day EMA faster than you could say, "Who's your daddy, Rich?" Yeah. Oh, yeah. I couldn't agree with you more. I couldn't agree with you more. And we're just a hair above it right now. Look at the SPY the last few days. And this is with the mags driving the market. So to me, it looks like somebody's really, really going out of their way to buy mags at the expense of everything else. And folks, the problem is it's all just capital weighted. All right. We'll talk about that, Alan. We'll talk about that when we get deeper into our analysis. We got 146 likes. We got 335 people in the room. Half of you have not liked it. I must not be giving you enough value here. All right. I wish I was closer. I would. Good morning. Aren't the 7 max stocks also included in the RSP? They sure are, Dennis, but they're equal weighted. See, we don't give them that huge weighting over here. We equal size them. So when you take the mags equally, this is the market right now. This is where we're at right now. Okay? This is where we're at right now. Okay? A lot of you are trading this right now. But when you're trading this, which hasn't really gone up this week, by the way, it peaked out 5 days ago, 1, 2, 3, 4, 5, 6 days ago, last week. You're really trading this right now. Yeah, what you're having is, look, you're looking at that driver right now, and he's over there 100 feet away from you, so you can't hear him. And he's driving 100 miles per hour. He started driving like this. Then it went. Now he's like this. Now you're still seeing the car going 100 miles per hour, but the guy inside the car, he's going. He's losing it. He's losing it. You can't tell. You can barely tell, but he's losing it. I'm telling you that that's going on right now, and I could prove it to you. Another way, look at the number of stocks, including ETFs, breaking out. That's including ETFs. Without ETFs, well, there's no ETFs breaking out. It's 59 right now. I guess the number gets really distorted when we're firing on all four. There's no ETFs breaking out. Of course not, which makes perfect sense. There's 59 stocks making 90-day highs right now. All right. Thanks, Dr. Serena. I appreciate it. All right. So folks, we have to be really, really, really careful. But Roger, you've been going long in the pit aggressively all week. You've been going aggressively long in the pit. Yes, I have. Which stocks have I been buying in the pit? I've been buying stocks that are literally making all-time highs or like 52-week highs, right? I haven't been picking anything below, right? I've been really focusing on that cream of the crop, right? IBM, Tesla, TWLO, right? I've been focusing on stocks that are really, really up there. And soon there won't be any stocks up there. So we got to be extra careful. And today's Friday. And Friday is, I'm sorry I'm spending a little more time on this, but trust me, this is important right now. This is a lot more important than gold. Trust me. And I'll go over that, all that. But I'm telling you right now that, this is oh, okay, good. I just got some good news. All right. So I'm telling you right now, this is really important right now because a lot of you are looking at the market and going, "Ooh, we're just a few, look at this. We're just a few ticks away from an all-time high. Look at the QQQ, ippy, ippy, purple chippy. We're making an all-time high. Yay! We're up 0.94. Yeah, you are, but be careful here, guys. Be careful. Yeah, I'm gonna bring back the sound machine. I figured out how to do it. I need another monitor, and I don't have the real estate for it. So I have to figure out a way for Matt to get another monitor um, to me so I could do it. What's your option for CVS stock right now? You know what? I looked at CVS this morning. I don't know. I don't know if it's on my list or not. Maybe I'll take a look if I have time. I'll take a look maybe. Lastly, remember, guys, I have the last time we're doing A line at 1 o'clock today live. It'll be you'll be able to watch the recording from yesterday in this room right now on YouTube after I am done with this broadcast in 45 minutes. But if you want to see me live, you're going to you're gonna have to have to follow that link and watch me do it. I'll also be in the VIP room. I really recommend you watch the VIP room today. We're gonna have a really good session there. I have some good stuff planned. And also remember, A line has not had a loser yet. So if you want to see how I trade the A line, it's a great place to go. Also, customer service live, the Gustavo and Cam show, and with a little Chip sometimes there. So Chip comes out there sometimes too. He used to be a floor trader at the exchange. He's very, very good resource here we have at the pit. Please utilize customer service live, okay? They'll come up. Come on, guys, more likes, more likes. All right, so now let's go through the broad market scenario, okay, that I wanted to start with. I just wanted to get this out of my head because I thought this was really important to you. So this is not, I know you're all happy right now. The Nasdaq's up 183. I'm telling you, be really careful here. Be really, really careful here. A lot of the professional traders, and I speak to about 10 professional traders, okay? And they've been extremely bearish. They, no, they've been extremely cautious for the last several days, and they've only been taking very small long positions, and they're very spooked out about the upside right now. And that's the first time they've all been this bearish in 2 years. Okay, in like 2 years, they've been hyper bullish, hyper bullish. This is the first time they're getting cautious. So, and again, I'm not talking about a big market move. I'm talking about just a nice, good correction to sweep us so we can get back to fair value. That's all we're talking about at this point. I have absolutely no reason to think we're entering a bear market, a recession, anything like that at all. All I'm saying is in the short term, we're getting way above ourselves. And this can be corrected in like 2, 3, 4 weeks. This is not nobody's seeing anything like, I'm not making any predictions long term. I'm just saying technically right now, today, that rubber band is so stretched out that it's almost impossible for it not to snap a little bit and kind of get back into its rhythm. Okay. Uh, okay. So again, just wanted to make sure you guys understand, and please be careful. If you have FANG stocks right now, it may be a good time to take a little profit on them if you've been holding them for quite some time. Rice says, what can trigger the correction? The Fed next week, and just technical price action. I mean, look, we are setting ourselves up for some crap right now. I mean, look, man, look for yourself. You tell me. Look at this chart. Look at the 7 stocks. These are 7 stocks that are driving the market. I mean, you don't think we're setting ourselves up for something? Look at this volume in the last 3 days. That's starting to look like a blow off the top institutional. This doesn't look natural. There's no reason for volume to be twice as big on FANG stocks this is not happiness. This is not happiness. I'm not, especially into the last part of the year when institutions are taking it slow. This is a big red flag. And it could be nothing, but that's a big red flag. Now, what am I talking about? A pullback? If we pull back to the 50-day moving average, we'll be peachy. So I'm only talking about erasing 2 weeks worth of price action. But this price action is this right here. This needs to be erased. This needs to be erased. If this is erased, then the RSP will look very similar to that. But if that happens, the RSP will probably be pushed right here. But be careful because the RSP is near the 50-day, but the MAGs are not. This is, look, equal weighted SPY, MAGs. This is not normal. This is not kosher. Thank you, Rich. I appreciate it. Cam says, so does this negate the Santa rally or does this come in full force after the holidays? Hard to say right now because this may undo itself even before the holidays. And remember, I'm not expecting, when I'm saying red flag, all these things, the car's moving, all I'm saying is that I believe that this should be erased. I'm not suggesting that we're going to go down here. All I'm saying is this right here. 1, 2, 3, 4, 5, 6, 7. The last 2 weeks have been highly unnatural. Unnatural. Just not, something's not right. Okay? That's all I'm going to say. I can't predict any more than that because I would be guessing, Cam, and I don't want to guess. Okay? All right. Economy wise, we had a bad print yesterday. We don't have a lot of data. We have import and export today. Nothing really there. We don't have any major earnings. Gold is cooling off. Why? I don't want to get into a long discussion on this because we spent a lot of time on it yesterday. Volume is rising and the bond market is now below the election levels. Anybody who bought bonds, who got really excited right here, between right here and right here, is now losing money because we're below this line. We're below the election levels right here. See that? Anybody who bought from here, they're all losing money based on volume, based on how much volume they've put in. And you can tell there was a lot more volume here than right here, but we're now below election levels. And if we come down here, we're bad. So you have FANG stocks coming up as interest rates are going straight up. FANG stocks are going straight up and interest rates are going straight up. Does that sound normal to you? I'm telling you guys, there's nothing normal about what's going on. And abnormal stuff can sustain itself not very long. Usually markets get arbitraged. We all know that. So bonds are going lower. Remember, we were right here. We didn't know which way they were going to go. I told you that if they go up, it'll be really good for home builders. If they break down, it'll be really bad for anything relating to home builders. I gave you O Realty. I gave you Lennar. We talked about this. We talked about it. Most of you guys come here every day, so I don't want to get into all of this. But yield is going higher. Bonds going down means yield's going higher. And what's happening to the US dollar? Voila, it's going higher. Gold? No. US dollar? Yes. Yes. Another reason why gold is still holding on, also, I believe because a lot of institutional investors are seeing exactly the same thing that I am seeing. And they're starting to put their money into gold and gold assets because they're not looking at the SPY. They're looking at this. So money is definitely coming out of the stock market. And I think some of it has been going to gold. Okay? But gold didn't do well yesterday. Gold did not do well yesterday. And here's where gold is right now. Okay? Here, I'm glad I updated it. Here's the updated chart. We're now at the 50-day moving average. So bonds going lower, gold going lower, US dollar going higher. Do you remember somebody on Monday talking about that? And Tuesday and Wednesday? Do you remember the discussion? How if we were right here, remember this Monday morning, we were right there. And I said that we can go up or down. The odds are we're going to go down. We're going to come back and kiss the trend. You guys remember all this, okay? So my suggestion is be careful right now with the market because this is only putting more pressure on bonds, okay? And there's no major Fed data today. You guys remember, I've been saying this every day for the last few days. Crude oil. Still nothing, but starting to move up. This is very interesting. I'm not expecting it to go much higher than this. I think crude oil will peak out. If we do break out of here, we have a nice little window. We have a nice little area here we can go higher, but we have to break out. And I'm not really seeing any news. I'm not seeing any news from the Middle East, and this would be a perfect downtrend right here. So if I know my technicals, the 100-day will hold, and we're going to come down unless there's some unforeseeable global news or something like that on the horizon. Omar says, it was one of your best lessons for me. So happy to hear that, Omar. Omar, hit the like button. Do end of year tax strategies support your narrative, George? I've never once in my life gave any attention to end of year tax strategies. The only thing I give attention to is end of year institutional buying. I never really focus on that. I'm not saying it doesn't, I'm not saying it's irrelevant, but no, I've never focused on it. Also, remember, guys, I'll be doing at 1 o'clock my live pattern trader. The deal goes off at midnight tonight. No soup after midnight tonight. Here's the link for that. We're also going to broadcast yesterday's right here for all of you folks who are hanging out right after this broadcast is over. So don't leave this room if you haven't seen yesterday's class yet. Here's the room for my VIP room where I'll be talking about some really important stuff. And don't forget the Gustavo and Cam show. Hey, Gustavo, if you're here, how was your kid's graduation? Let us know. We're all curious. News talking about Syria. Thanks, Rochelle. I appreciate that. So again, be careful because this looks like a pivot. It tried to break out 3 days. It couldn't. Volume was even high and volume is coming down. I'm fearful that this is a pivot. I may actually want to write some premium. I've been wanting to write some premium, but implied volatility has been so low. China's going down. Actually, the fundamental news is that China is really down today. But according to the top 50 Chinese stocks, we're only down 1%. But as you could see, what happened after we came up to this level? We're coming right back down. We're below the election VWAP. We're below the 8-day EMA. China. I'm fading China. Chinese stocks. I'm expecting us to come right down here over the next few days. Okay. So not seeing anything in China. Volatility's been really weird because the market hasn't been coming. We've been having a very mixed market the last few days. Volatility's still here. I'm expecting volatility, especially if the market's strong today, to come down all the way, although I'm not seeing it. There's really nothing to worry about at this point. If we start rising above 15, remember there's a big air pocket here, all the way to 17 and then 18. But again, I'm only expecting this to rise if today the Nasdaq starts selling off, and it would be kind of hard for it to do that in light of everything we're seeing right now. Good. Glad to see that, Gustavo. Glad to see that. I'm going to talk to my son today. It looks like he's going to be going to Australia for his vet school. Oh boy. And I hate traveling too, so don't know how that's going to go. All right, let's put everything together. And then let's talk about the stock market some more because I have a lot more things to talk to you guys about, okay? Ooh, 218 thumbs up. Eagle Beagle, where is Eagle Beagle? I haven't seen him. Eagle Beagle, are you here today? I don't know if Eagle Beagle's here. Adam, if you're here, say hello. Yeah, hope your kid's doing well. All right, so we had Broadcom boost sentiment. That's one of the reasons why Nasdaq is up. But interestingly, semiconductors are up 2.3%. Look at where we're at the 200-day line. Are we breaking out anywhere? No. But the stock is definitely giving us a boost today. We're looking for next week's federal meeting where they're going to lower rates again. Broadcom up and they raised their guidance. Now, there's something I want to clarify with you, okay? Yeah, good. Yeah, Rice. Yeah, I'll be taking that trip quite a bit. Anyways, so I always talk about when stocks have above consensus revenue guidance, when they issue above consensus revenue guidance. So people are getting really excited about it because they think they just invented the Holy Grail. So I'm gonna put some cold water on you guys. Above consensus or below consensus guidance is way more powerful when there's no earnings attached to it. So it's not uncommon. I mean, it's a good sign. It's still very important when they raise their guidance or lower their guidance when they're doing earnings. But it's 10 times more important when they do it, when they do it, and there is no earnings attached to it. Does anybody know what company last night came out with uh, who upped their guidance without coming up with earnings? Does anybody know? You should be watching for that. You should have a news feed and you should be watching for that. Can anybody tell me what company last night raised their guidance but didn't have anything to do with their earnings? Let's see how smart you guys are. Meanwhile, I'll continue going through this. It's not Broadcom. They had earnings. You should know this. You should know this like this by now. You should know this. Whenever a company comes out with guidance and there's no earnings attached to them, that's huge. No, it wasn't Costco. Costco had earnings. Come on, you guys know Costco had earnings. Raj, I just said companies that don't have earnings, where they up their revenue, their guidance without earnings. We all know that Costco just had earnings, right? Right? So I'll give it to you in a few minutes. Stop guessing. Wall Street, Adobe plunged, didn't do well. They disappointed their revenue forecast. They lowered their guidance basically, but they had earnings, not as important. No, all good. Ah, yes. E and J. E and J got it right. E and J got it right. E and J got it right. We know that chip stocks lost ground yesterday because the 10-year yield rose to a 2.5 week high. Yeah, their interest rates are not an issue. CPI, PPI is rising. Yield on interest rates is rising to a 2.5 week high. But Fed doesn't have to take action. They don't have to take action. Micron Lam Research sliding 3% yesterday. Yes, RH. Yes. Sorry, Tim, I don't deal with that. I don't have anything to do with that. Even if I say yes, it wouldn't mean anything. I have nothing to do with prices. I don't deal with that stuff. I gave that up 7 years ago. Yeah, about 7.5 years ago. Economic data. I'm not going to talk about the PPI because we've talked about it more than we need to. It was horrible. I can't wait to see how Powell and his cronies are going to spin it next week. Unemployment jumped to an 8 week high. It's nothing. This is nothing. If anybody starts talking about unemployment, it's absolutely fine. Now, I think this is priceless. How about this? How come everybody? Okay, so every time I watch 60 Minutes, every time I talk about anybody, whenever somebody talks about inflation, they're always talking about egg price, and I'm guilty of it too. I think it's the only thing people can like all relate to, right? Everybody eats eggs, right? Everybody knows what they cost. But look at this. I thought this was funny. With egg prices appearing to play a key role in the hotter than expected headline, traders may be focused more on the jump in jobless claims. I don't care why. I mean, I don't care why. The point is the numbers are worse than they were a year ago. But again, they love to bring egg prices into this. They love to bring customer service, Tim. Just call customer service. They'll take care of you. And actually, today's the last day to get the deal before price goes up. So egg prices, right? Isn't it funny? We always talk about egg prices. I talk about egg prices. 60 Minutes talk about egg prices. The president talks about egg prices, right? What is it up with? What is our fascination with eggs, right? But it's so funny because I do it too. So have you seen egg prices lately? It's the funniest thing in the world, but everybody always talks about egg prices. I'm sorry, it's just really funny because I do it too, okay? There's now a 96% chance that they're going to lower rates 0.25 basis points. Hit the thumbs up button, guys. Europe is up just a hair. Investors continue to evaluate their economic policy. They lowered their rates, as I mentioned to you guys, 0.25 basis point. Right here, 0.25 point base cut. China closed sharply lower. Now, I'm looking at China, and it's only down 1%. So China must be really down because sharply lower. I don't see sharply lower, but we're always a little bit behind. As investors were disappointed by lack of details from Chinese conference, property stocks were among the worst performance. The benchmark index wiped out all the earlier gains and notched a moderate weak loss. Yes, Rich, of course. And bread, right. I'll get chickens. That's what Matt did, Rochelle. Matt got some chickens. Egg prices. I'm telling you, egg prices. It's the funniest thing. It's so funny because I do it too. I'm just as guilty as the next guy, right? Egg prices. That's what I talk about at parties, egg prices. Japan, I'm cracking up. Japan closed lower today as overnight losses on Wall Street dampened sentiment. Did you guys see? Does this look like to you like it's weak right here? Weaker prices overnight. Look at the market right now. Look at Nasdaq up almost 200 points. Does that look like to you weakness overnight? So I don't know where they come up with this stuff. Prompting investors to sell shares for profit taking. Electronics and machinery stocks led the decline on Friday. Folks, be careful of this market. Be careful of the Nasdaq. If you have tech stocks, we're going to get a gift this morning. Take your profits on your high flying tech stocks. I'm telling you. All right. Have a coup. There you go, Rochelle. Yeah, maybe they meant week over week. That's what I'm thinking too. All right. AVGO surged over 14%, did great. I love this company. This is a fantastic company. I know Jack Carter loved to write option premium on this. I don't know if he still does or not, but I know he used to about a year ago. Mm. Restoration Hardware raised its full year revenue forecast. Raised its full year revenue. You see nothing about earnings, just raised its full year revenue forecast. Restoration Hardware. Let's take a look at what Restoration Hardware is doing right now. Look at that. Graham, so does the Fed lower rates and try and drive the TLT up? Yes, that's exactly what they try. And they have been very unsuccessful. As a matter of fact, had they listened to me and not done anything till the election, the bond market would be beautifully right now because it would be speculating. And now, if we had what we're seeing right now would be a time for the Fed to start lowering, and now Powell would be a hero. Instead, he looks like a putz. All right. Oh, okay, Steve. Thanks for telling me that because it seems like they announced it at separate times. Okay. So again, just so you know, if a company out of the blue, hey, by the way, we're raising our guidance, that is the most powerful thing a company can do. The most powerful, randomly, aside from earnings. Even if they announce earnings on Friday, but on Monday they come and say, oh, by the way, as long as it's not part of that package, it's infinitely more important, okay? Just as a note. All right, so I think that's it. Salesforce is doing well. They got upgraded by KeyBank. That doesn't mean anything. PayPal got upgraded. So tech stocks are definitely getting a little upside today, a little too much upside in my opinion. And the Dow is completely random. And the S&P is going along for the ride because 40% of S&P is right here. Okay, so let's talk about momentum. As I mentioned to you, what sectors are leading right now? Well, remember what I told you earlier this week. Technology, interest rates, blue chips. It seems to be the same thing. The problem is you've got semiconductors and technology already down here. So the only two sectors in the technology that are really leading right now are consumer discretionary and communication. How much firepower can we get out of these two sectors if semiconductors are still here and technology is still here? You need all of them to move together. This is dangerous. Again, vulnerability. The same vulnerability that I'm showing you right here. That only 54% of stocks are trading above the 50-day. Vulnerability. All right? A lot of vulnerability. Okay? Yeah, if they miss their quarter earnings but raise their full year guidance, that's even more important. That's good. That's really good. So we have a lot of vulnerability right now. A lot of vulnerability. Only 59 stocks making high. Only 59 stocks breaking out to 90-day highs. Huge vulnerability right now. Huge vulnerability in the market. All right. S&P too, only 49% are above the 50-day moving average. It's not good. So, levels on stocks. Let's do that right now. Right now, we're keying off of the 8-day EMA. I don't know how much upside we're going to get, and volume has still been really low. And I'm expecting volume to continue getting lower and lower as the year continues. You could see right here in the last one, two, three, four, four sessions, we've had very little trading range. Look at the ATR. Look at the daily range. Look how small it's been. That's not firepower. That's randomness. Okay, that's randomness. So keep your eye on the 8-day EMA and how we bounce off of it. Keep your eye on the all-time high, but this is random trading action. Nothing is being driven here. Okay. Weren't we FANG heavy? Yes, we were, Jeff, and it always corrects. It doesn't sustain itself. When we had the first half of the year when the chip stocks were rising, the chips caused all the tech to move up because they were all playing the AI, AI, AI. And I told you this AI is a bunch of monkey business. AI is a big fad. AI is just advancement in technology. It's been going around Sony was making those cats and those AI dogs 20 years ago. I mean, there's nothing new here. It's just the next advancement in technology. When we have robots that can clean your house, put your roof on, communicate with you, drive your car, that's AI. AI is when you have a system where it can learn itself without the need of humans. Last time I checked, we're 20 to 30 years away from that, folks. Just like we are at least 30 to 40 years from EV making a real impact in the world. Just watch Landman. I'm telling you, that 5 minute segment, that's 100% reality for you. Okay. Keep an eye on the election VWAP. We're still above it. For the Dow, for the Dow, Dow Jones right here, we had some volume. But the problem is, yes, Jeff, but the volume was downside volume. And the volume is right here. This is where the volume is coming from, Jeff. Who was it? Who's going to just say that? Jeff, yeah. This is where the volume has been coming from, Jeff. The 7 stocks. Look at RSP. All red. Red volume. Yeah, you've been seeing volume all right. Red volume. That's not good. Uh, all right. That was epic, right? Has anyone noticed how much I'm not looking at cocoa. So again, just be careful. Be careful. Equal weighted spies almost at the 50-day moving average and the quarter date VWAP. That's the level you want to watch. For IWM, for the Russell, for the Russell, keep an eye on this. We're already below the VWAP on the Russell. And if we continue going lower, we're going to hit the 50-day moving average. And look at the volume on the Russell. Not one day above the averages. Not one day. So not really great volume. What about semiconductors? Let's look at semiconductors. Yes, Jeff, that is also why we're so spready on options, which has been really noticeable last week and this week because half the time I tell Matt to put on a trade, he's like, I can't do it. It's got options. An hour later, hey, Matt, did you put on this trade? Did you put on this trade? Uh, no, options are too wide. Every other stock I tell him to trade. How is Russell Demand? Russell Demand? Let's see how Russell Demand is doing real quick. Let's see how he's doing. Roger Scott Truth. It used to be Roger Scott Scam. Now it's Robert Scott Truth. It's funny how things can change. Let's see how Russell's doing. Here's Here, guys, if you haven't reviewed this yet, and if you haven't given a thumbs up, please do. I would appreciate it. It's he's reviewing Stealth Surge. Give him your true opinion on Stealth Surge. Here's the link. He's doing well. He's now our affiliate. He went from being our critic to being our affiliate. Isn't that funny? I love when that turns out. So semiconductors. Semiconductors are right at the 50-day moving average. Well, you have 253 to overcome, and then you have all of this to overcome. Do I think we're going to overcome it? No, I don't. And by the way, we're still in this range. Remember I drew 265 for you right here? Just like I drew this for you 5 years ago in the Russell. Look, I drew this right here I drew this several years ago, right here, several years ago. And look, finally, what happens when we broke out of here? I drew this for you years ago, and look what happened. A lot of you were actually here when it happened. The volume, look at volume. Volume is coming off. Be careful, be careful. Yeah, please give that video a review. Just give your honest review with Stealth Surge. We've had 23 winners in a row. All right. All right, let's talk stocks now. And then we'll finish up here. Short side, be careful today, folks. Be careful. Be very defensive today. BAX coming up. Here's a red line potential on NOC. Wait for this to trade below this VWAP right here. Wait for it to trade below 472.29. I love the volume, but I want it to trade below. Look how it's holding this right here. This is the year-to-date VWAP. As soon as it breaks this, everybody who bought this year would have lost money. All we have to do is break this level first. Okay. Caesar. China, when China does bad, gambling, casino stocks do bad. Right here. I would wait for this to break 35.96. PLD. Only 250 thumbs up. I haven't given up on Bitcoin, not at all. No. PLD. As a matter of fact, Bitcoin is still right here. It's still pretty strong. It's still in the top four. Still, as long as it's above Invesco QQQ, we're still good. Let me go back here. PLD. DHR, another potential short. I like this one. If this breaks right here, which it looks like it's about to, it's up this morning, but if it comes right here at about 230, 270, I think it's going to come right back down. And look, volume is picking up. Come on, guys, let's get 300 likes here. FIS. Wait for this to break the 50-day moving average or trade it with a profit target of the 100-day moving average right here. CNQ. Come on, guys, let's give a thumbs up to Uncle Roger. This looks ready. And look at volume. All red several days in a row. Look at that. Boom, 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 boom. KSS, a crappy retailer. Volume is picking up. It's going down. Volume is supporting this move. Play. There's a play. Dave and Buster's. We used to have this in Los Angeles. More downside. COP, an energy stock that's breaking down. Cigna, a healthcare stock that's breaking down. And I'm going to do a full sector of review of 20 sectors, including Bitcoin in the VIP room today. Look how crazy the stock. Look at volume and look at the price. See how volume is supporting this move? There's firepower here. Wait for till we get to the VWAP, but probably a good. I mean to the 8-day EMA, but probably a good time to sell it. Crown Castle. All right, let's now do the long side. Okay. Zebra. Right at the 8-day EMA, volume is rising, actually. It's not that great, but it is rising. I would be careful here. I would wait for it to take out the all-time high. Williams Sonoma. Beautiful. Look at that. Beautiful, beautiful stock. And volume actually is coming up. IBM. Do you guys remember doing IBM this week in the pit? Looks like we may have some more upside. Volume is coming up. I like IBM. Wait. You know what this microphone is great for? For scratching your nose in real time. That's what the beauty of having a microphone close to you. You can just scratch your nose in real time. Waystar, look at the volume on this thing. It's supporting this move. Be careful, folks, right now of upside. Be careful, especially Apple, like big stocks like this, because if Apple goes, oh boy. Well, that so far looking good. Volume isn't great, but price is looking good. CMG, Chipotle. Yes, I said it right. Chipotle. I would wait for the 8-day EMA here. Chipotle. Dropbox starting to come up. I like the volume here. I like what I'm seeing here. STT. Nice grind. Nice, beautiful grind. Let me add that to my list. That's a nice looking stock right there. Rockwell. Nice, nice volume. Look at this. Volume's low on SPY, but what is it doing here last few days? It's breaking above the average every time. It's supporting its move. Have I given you guys, since you guys have been watching me here, have you been putting more attention on volume than before? I'm curious. Have you been putting more attention on volume since you've been following me? I'm curious. Let me know. I'm very curious about that. Can I get options for CVS? No, you're not going to get options for CVS stocks here, James. No, no. You know better than that, James. Look, volume is rising. All right. Ricose Omar says yes. Kevin says yes. Lee says yes. Come on, guys. I do this every day. We have over 500 people here. How much have you guys been focusing on volume? Look at that. A lot of yes. Have I opened your eyes to volume? Do you see how important volume is? Come on. You could say yes. You could type. Good. Good. A lot more volume. Okay. All right. One more. XPO. Good. Whew, a lot. Definitely. Absolutely. James, I don't give options here. I give options in the VIP room. Speaking of which, VIP room is at noon. Right here. All right, good. See, Cam, we're making differences in people's lives on a daily basis. People are actually focusing on volume. Isn't that amazing? The most basic fundamental technical analysis factor that most people never focus on is volume. Volume. Make sure if you're breaking out, you have volume supporting that move. Okay? All right, folks, here's a link. At 1 o'clock, I'm going live, and this will be the last time I do it. Now, Josiah, are you here?
Oh, I'm here.
I can't hear you, Josiah. I
Can
know
you
you're here.
hear
Let me
you?
change the...
Can people hear
Huh.
me on?
I guess your mic isn't working. All right. We're going to right now broadcast. Oh, my opinion of CVS stock. I can give you my opinion. My opinion is to sell the living hell out of it. This has been on my watch list last several days. It's a crappy stock. It needs to be sold. Look at volume. All right. So, folks, here's the deal. I'm going to stop my share, and Josiah is going to stream right now the A line from last night, so you guys can watch it right here. Oh, you can hear him. I don't know why I can't hear him. All right, let me stop this right here. That's kind of weird. Why can't I hear Josiah? Let me see what my audio is. Where's my audio settings are? Huh. Real weird. I can't hear him. I better check my system. All right. So you guys have this now. Josiah is going to stream something for you guys. If you have any questions at all, Roger at rogerscott.com. And Josiah, for some reason, I cannot hear you. I apologize, but you guys can hear. So watch this broadcast, take notes, ask me questions in the VIP room, and I'm going to do this live the one last time today at 1 p.m. I'll see you guys later. I hope you have a fantastic and the most beautiful, beautiful day. Rate has been 100% so far. Mea culpa. Sue me. What can I do? Now, in trading, there will be losers, and I'm pretty sure we will have losing trades in the future, closed losing trades. We put them in here when we enter them and when we exit them. So just FYI. So there will be losing trades. I promise you there will be losing. I guarantee you there will be losing trades. But the key here is not to give you winning trades all the time. The key is give you an edge, because over time with an edge, you will make money consistently. Okay. So don't be trading with money you can't afford to lose. Learn to trade, get a confidence for the program, and then play around. Don't do that till you do that. Now, my name is Roger Scott, and today I'm going to give you the #1 pattern to trade in today's markets. It's an indicator-based pattern that's allowed us to accomplish two incredible feats. Grow our model portfolio by an average of 85% a year since 2020, achieve a 75% accuracy rate on 139 trades, live trades. But since we launched it, it's been 100%. So again, as I mentioned, this is my go-to program that I was doing in the background when we needed to fill trades and other programs. And I would say, I'll give you a bonus trade, this and that. So we tracked them. And I said, the results are so good, we should launch this program on its own. And we did. And when we launched it in the summer, last summer, we haven't had a losing trade yet. I would say that's pretty good. Now, get this. On July 15th, I shared this pattern with over 2,500 people. All right, July 15th was the date. Since then, the market has experienced two major pullbacks and one massive rally. Our pattern has remained undefeated. In fact, it's posted 22 straight winners in a row. That includes an 82% winner overnight, a 26% winner overnight, 43% winner overnight, 77% winner overnight, and 18 other needle movers since we launched it on July 15th. And that's why I invited you to today's session. Too much demand, too many people asking me questions, too many people interested in it. As you see, this pattern is taking shape once again. And if things play out as I expect, we'll be targeting our 23rd win early next week. And I'd love for you guys to be a part of it. Now, I'll share all the details in just a moment, but first, let me show you how it works. It all starts with the pink indicator you see on the chart. It's called the A line. Despite its simplicity, it plays a key role in identifying our pattern. Now, the way it works is very, very straightforward. All we have to do is wait for the daily candle to close below the indicator, open a trade the very next morning, and close out anytime the stock crosses back above it. For example, let's look at the historic market data from March 26th of 2024. If you don't remember, the S&P had just closed lower for its fourth consecutive day. The market internals, they were weak. And most folks assumed another day was just around the corner. However, there was a day that the 3M closed below the A line. You can see what I mean right there. Despite the chaos in the broader market, it was a clear sign that 3M was primed to snag higher. Anyone who opened the basic trade the next morning would have seen a 77% return just 2 trading days later. That's no different than seeing $1,000 turn into $1,770 in 48 hours. Pretty damn good. To your typical trader, that might seem a little far-fetched, maybe even too simplistic to actually work. But when you understand what's really driving this pattern, it's not uncommon at all. As you'll see, there's something special about this one particular pattern. When it appears, we know that with 100% confidence, a bullish move is much more likely than a bearish one.
For instance, look at one of the top examples my team found in the stock ticker PGR. Back in February, the stock closed lower for the fourth day in a row. To the average Joe, that's usually a bearish signal. But when you're trading my number one pattern, it's part of the plan. And in this case, you could see progressive closed below our indicator. Once again, it was a clear signal that bullish move was just over the horizon. Anyone who opened the trade the next morning would have seen a 93% return just 2 days later. 2 days later, I tell you, right? $1,000 into that one would have turned into $1,930. If you let a few days longer, the return would have eclipsed $4,100. And with opportunities like that, you don't need to do much else. No betting on earnings report. We don't play that game around here. We know how that works out, right? Just look last night at Adobe. They beat earnings estimates, and I don't even want to go there. No, we don't chase headlines. As a matter of fact, I don't even read the headlines. You guys know I have not read financial news in over 20 years. I just read my headline on bar chart, and I look at the chart, and I look at headline feeds. That's it. None of that stuff. And I was able to predict correctly the 2 presidential elections a month in advance just by looking at charts. And most of you know that because you were there. You don't need to be a rocket scientist, and you don't need to read the news. I don't listen to Kramer, although I've been thinking about flipping his, creating a service that flips his trades, but I've already heard there's one already out there. It's called the Matt Kramer Inverse Fund. You can't make this stuff up if you tried. You just wait for the daily candle to close below the A line, open a trade the very next morning, and close out any stock anytime the stock crosses back above it. Now, let me be very, very clear with you. It's not your typical stock market pattern. It's not based on price action or any other commonly used candlestick pattern. This pattern is tied to a market anomaly at the center of hundreds of academic papers. Anomaly that accounts for 80% of all moves in the stock market. And by leveraging it the right way, we've been able to find dozens of meaningful wins in both good times and bad. For example, let's step back to the pandemic. Simply following our pattern, just following our pattern, nice and easy, without any monkey business, we were able to produce several high-profile wins. 50% winner on VRTX, 72% winner on PayPal, 108% winner on Freeport McMoran in just a week. Not bad. And keep in mind, these were real published alerts when markets were uncertain. Fast forward to the bear market of 2022, similar story. Between January and July, the pattern won 18 out of 20 times. That's why I consider this the world's most predictable pattern. And I'm not just saying that. I've got evidence to back it up. When it appears, we know with 100% confidence a bullish move is likely to be on the horizon. It's the only pattern, the one pattern that seems to shine during inflationary markets, deflationary markets, bull markets, bear markets, and recessions. It's how we've grown our model portfolio by an average of 85% per year since 2020. In the last 3 decades, I've traded countless setups. I've grown 2 multi-million-dollar hedge funds, and I've managed money for one of the Bronfman family from Canada, the richest family in Canada. But this one predictable pattern takes the cake. Now, of course, I'm not guaranteeing a winning outcome every single time. Despite the performance we've seen, we both know there's no guarantees in trading. Things happen, markets turn, and people can lose money. But we've been quietly targeting this pattern 139 times in the last 4 years. It's managed to win more than 7 out of 10 times on average. And that's why I prefer to teach this pattern to our employees. It doesn't require them to be glued to the market all day. It doesn't interfere with their full-time job. They can simply look for our pattern after the market closes and place a trade the next morning. For example, look at what happened with Taiwan Semiconductor. On January 31st, the candle closed below the A line. It was a clear indication of a potential opportunity the next morning. For reasons that will become clear soon, TSM moved higher over the next 5 trading days. Anyone who opened a position would have seen a 125% gain. That's 2 times the return in less than a week. every $1,000 would have turned into $2,250 without breaking a sweat. And that's why I favor this pattern above all else. You don't need 5 monitors to trade it, although I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 monitors in here. You don't need a PhD in charting. You don't need to study hours at a time. With one simple indicator, a little common sense, you can target what could be account growing opportunities on a regular basis. And today, I'll show you everything you need to start trading this pattern, including the stocks to trade, the indicators, the anomaly behind this, and if you behave yourselves, I may even give you some hot stocks that I'm looking at. By the time the webinar is over, you'll be able to follow along with me on this pattern. Now, if this is the first time here, my name is Roger Scott. I'm the senior trader and guru at the Trading Pub. I've been professionally trading in January, first week of January, it'll be 31 years that I've been doing this. Let me tell you who I've worked with. This is a mistake. My hedge fund partners include the current senior financial economist to President Trump. Kevin Hassett, he was the economic advisor the first time Trump was in the White House, and now he's the current economic advisor that President Trump is back in the White House. So I was partners with the current economic advisor to President Trump's administration. I was partners with Charles Calomiris, the professor of economics at Columbia University, who's been there for longer than I've been trading. And I've been partners with Curtis Faith, the youngest turtle trader from Richard Dennis's experiment, featured in the Market Wizards book. And I've also traded here in the pub with Tony Saliba, who is also featured in the Market Wizards book. So I've actually traded with a couple of people from the original Market Wizards book, which for those that don't know is the Bible of trading. If you don't have it yet, you should buy Jack Schwager's Market Wizards, New Market Wizards. It's got people like Stanley Druckenmiller, Paul Tudor Jones, Richard Dunn, billionaires, those kind of guys, the guys that you're trying to become with your trading. And I'm not being sarcastic. But for the last several years, I focused my work on the regular guys, on teaching you guys how to trade. And I've shared hundreds of money-making opportunities across my services and live streams. Now, it's not an exaggeration. Within the last year, I've posted top returns like Home Depot, 110% in a few days, Apple, 112% in 12 days. Heck, even look at this one, Oxy, 166% in 1 day. Now, I used to have a doc that would have all my testimonials, but we've done away with that. We now have I have a channel, a testimonial channel. And this is just today. It's got to load. It takes a little time. But you could see I get a lot of testimonials. Like a lot of testimonials. People are happy. Let's just say that. Now, a couple of recent ones. Roger, thank you for Dollar General, 290% profit. Steve, RTX, Bob. Bob was here, actually. Bob, say hello. Caroline will repost your 429%. Damien, 2,000. This guy made 14 times his money. Love that. Mary, 14 trades, made money on all of them. Very happy. Started with 4,000, now have over 8,000 in just 15 days. Love it. Sheldon took my $2,000 account, turned it into 17,000 in just 6 weeks. As great as all of that is, this one pattern takes precedence over all of it. It's one of the few patterns you can trade regardless of experience, time constraint, or capital. It's effective enough to be traded by real professionals and basic enough to be used by folks like you. And that's why I want to show you how to trade the A-line pattern inside your own account. I believe this one pattern can help you experience your first big breakthrough in technical trading. In all of my years as a trading educator, I find that most folks are good at picking the right stock, but struggle with their entries. If your entry's off, your chances of making money, especially if you trade options, is not very good. That's where this powerful pattern starts. When a stock closes below the A line, we know we could have a perfect entry point. For example, look at the market data for NextEra Energy. At first glance, it looks like a perfect stock to trade, right? Where do you enter, right? Let's say you enter right there. Well, to the regular eye, it looks like a great little breakout. We had a compression. Look at what happens next. Now, what if you bought right there? Well, once again, the price pulled back and you'd have lost money. What about right there? In that case, you'd have come out top, but it looks like it took 3 attempts to get there. Now, let's apply our indicator and look for the pattern. Here's the same chart as before. And here it is with the indicator. You can already see the one clear entry point. Of every candle on the chart, it's the only one that closed below the A line. And in my opinion, it offered the best possible entry point for your trade. Anyone who opened the position the next morning would have seen a 79% gain in 5 days. I like those odds. And you had a little longer, you would have made out like a bandit with 150%. So if you've struggled to extract money from the market, it's likely has to do with your entry. And that's the real beauty of this particular method that we're talking about right now. When it forms, we know with an optimal certainty, we know we have a bullish move. We have something of interest we need to review immediately. For example, take note of what happened earlier with GE this year. At first glance, it looked like the stock had a hard time finding an optimal entry, even as it went higher. But you could see, by applying the indicator, we see 2 entry points, one on January 3rd, the other one on January 17th. Both instances, the stock closed below the A line. All we had to do was open a trade the very next day knowing a bullish move was probable. Anyone who did would have walked away with 2 winning opportunities worth 136% and 51%. $2,500 into each of these would have grown into $9,675. That's money that could have gone to a number of things: a car payment, groceries, credit card debt, plane tickets, emergency fund, or even back into your trading account. Now, I'd like to remind you, no pattern wins 100% of the time. Despite the fact that we've been very successful, the A-line pattern is not magic. It can't guarantee a home run every time you step up to the plate. But what it can do is help identify near perfect entry points and strong opportunities. Doesn't matter if you've just opened your first trading account. Doesn't matter if you've never won a single trade in your life. When used the right way, we've seen a profitable outcome at least 7 out of 10 times on average. And since we launched the program, we've had 10 out of 10 wins on average. We don't have an average yet. I don't have an average. We've only had winners. And that's not because we're doing anything special. The secret behind this all starts with the indicator. It's short for accumulation line. It's used to determine if a stock is trading above or below market value. If the candle above the indicator, it means stock is trading above the market value. If the strong trending stock, the candle will stay above the indicator about 95% of the time. You can see what I mean right there. However, in the 5% when candles dip below the indicator, it means the stock is trading below market value. All right. And that's important because that's typically where we see that institutional step in to accumulate blocks of shares. There's a reason for that. And as you would expect, this accumulation is what drives the stock back above market value. My theory is that there's institutions have VWAPs right below the 5-day simple moving average, which is one of the reasons why. I mean, I'll get into all of that later, but I have a theory why it bounces so well there and violates it. But that's just a theory, and that's important. When a stock closes below it, we know that institutions are likely to accumulate shares, right? And drive the stock back above market value. In the trading world, we call that the low-hanging fruit. For example, let me show you what happened on January 3rd. That's the day NVIDIA closed below the A line. It's told us the stock's price had fallen below its true market value. In the eye of institutions, algos, it was an opportunity to accumulate shares at a below-market price. As you'd expect, the stock popped back above market value as institutions likely moved into place. Anyone who opened the trade the next morning would have captured 268% return in just 4 trading days. That's like taking $1,000 on Monday and turning it into $3,680 by Thursday. Obviously, it's a huge return, but it didn't happen by chance. This pattern plays out hundreds, maybe thousands of times per year. I would say thousands of times per year. Each time a trending stock dips below market value, it can trigger the institutional algorithms. As you'd assume, these algorithms are programmed to start accumulating shares. This accumulation often continues until the share price is no longer trading below market value. That's the reason why the stocks usually snap back up above the A line within a few days. The technical term for this is called algorithmic accumulation. It's the anomaly I mentioned earlier. It's been studied by Harvard and Yale. And by applying the indicator to our chart, we can see where this algorithmic accumulation is likely to happen. Now, here's the thing. The algos are not just locked on a few tickers. They're locked on hundreds of stocks and ETF at a time. For example, look at SPY. You can see each instance where the price closed below the A line and where the algorithms likely stepped in. It happened on January 17th. It happened on January 31st. It happened on February 13th, February 21st, and March 15th. The studies show that 80% of all market moves are driven by algorithms. Algorithms. All right. But in this case, you don't need to rely on the studies. With this indicator, you can actually see it with your own two eyes. It doesn't matter which stock you're looking at, looking as it's trending higher. You could see it with Apple right there. NXP Semiconductor, Vista Energy, Costco, Schwab, Morgan, GE, Progressive, and dozens of others. Thanks to this algorithmic accumulation, stock has almost no choice but to snap back higher. That's why I consider this to be the world's most predictable pattern. And that's why this indicator is so critical. It highlights the exact point where algorithms are likely to accumulate shares. And as a result, we can get a near perfect entry point for our next trade. All we've got to do is wait for the daily candle to close below the indicator, open a trade the very next morning, and close out anytime the stock crosses back above it. It's how we've won 22 out of our last 22 published opportunities. And I always say, if my kids were interested in the market and they're showing zero interest in the market, I mean, my son is about to go to vet school and my daughter's going to go to law school next year, and my little one's only 11 years old. Maybe I have a chance with her, but so far, zero interest in the markets. Okay, zero. Ironic, right? Don't ask. I'm just being honest with you. But if they did, this would be the maybe grandkids when I finally have them. I don't know. Hell, maybe I'll teach Matt's kids how to trade. But that's how we've won 22 out of the last 22 trades, and since we launched the program. Now, in a moment, and this is the easiest, simplest way to learn how to trade effectively, to build up your own really good trading habits, okay? In a moment, I'll set you up with everything you need to trade this pattern, including my complete A-line dashboard and a few stocks to help you get started. But first, let me show you how to set the trades up. And by the way, if you're here and if you're in the program, can you let me know how you've been doing with my programs? Because there's a lot of people here, I don't think a lot, but there's some people here who are new, who've never experienced me before, who may be a little skeptical, who may think I'm talking out of my you-know-what. Just let them know that I'm not some used car salesman. You know, I've been doing this most of my life, and this is what I do, and I'm very proud of our track record and the community we've been able to build. So if you're part of that, if you've been with me for some time, please don't be shy. Post it in the in the Zoom channel, and Carolina will repost it for all of you to read. Now, I couldn't blindly open a trade just because the stock closes below the A line. Don't get too excited. If you think it's just a line I'm relying on, no, you're sadly mistaken. We're looking for stocks where the institutions and their algorithms are likely to intervene. And that's why I like to follow a key few rules to help reinforce our chances of success. You may want to write these down. They may help you. Grab a pen. Do it now. Don't go anywhere. Just grab a pen and come back. This is worth your time, all right? Avoid stocks trading under $20. These are not stocks that institutions are interested in, unless you're going short. They are interested in $100 stocks that are now at $15. Those are great, but not going long, okay? All right? Because algos are just not that interested. They're just not. Also, we want the ATR, the average true range, to be above a dollar. And most stocks under $20, unless they're like huge high flyers, they're not going to have an ATR over a dollar. So that will exclude them anyway. But my point is, you definitely want that range, because if a stock has a range of less than a dollar, then most likely institutions are just not playing that stock. This confirms the price fluctuates more than a dollar a day. You need some movement. If the price does not, usually it's not going to garner any institutional attention. Only trade stocks with a strong, mature trend. You don't know how many times this has happened. Roger, it went from $20 to $5,000. Why would I buy it now? Roger, it went from $500 to $600. Why would I buy it now? Well, let me ask you an interesting question. What's the biggest company in the world? Probably a stock that's making all-time highs. Would you fade that company? Would you ever fade the biggest company in the world? That doesn't make any sense. You want those stocks because those stocks showed the most resilience. Don't try to pick bottoms and don't try to fade tops. It doesn't work in the real world. It doesn't work in the real world. The stronger the trend, the more engaged the algos are. You know why? Because every day when it goes to a key level, algos have to keep buying to keep it up. It's like, hey, Matt, what are those balloons that oh, he left the room. It's like those balloons at a party where, huh? Oh, you're here. You're there. I can't even see you anymore. What are those balloons? That they go up, but then they go down, but then you got to keep them. What are they filled with? Helium. Yeah, helium. The one that make you sound like this when you talk. Yeah, those. So it's the same thing. It's literally exactly the same thing. You have to keep doing them. You have to keep pushing them up, or they'll fall down. They're not just going to float up away from you. So that's how algos work. They have to keep pushing the price. So if you see a trend like this, that means algos are buying it, and they keep supporting price as it's going higher, right? Essentially, you don't want stocks that look like this. You don't. You want stocks that look like that. Okay? And if you come to my morning shows, or if you come to you'll notice that most of the stocks I picked look like this, like a runaway train. So by following these rules and a couple of others that I'm not going to give out here that make all the difference in the world, and if you think you could just make this stuff yourself by following this, oh boy, woo! Give it a try. See how it works out for you. So the chain is only as strong as its weakest link. So just me avoiding one little thing completely screws the whole thing up. So don't think you're smart enough to follow this and do this yourself. Trust me, it's a lot. There's a couple of other steps to this. It's allowed us to grow our portfolio by an average of 85% per year on average. And that brings me to rule number 4. The single rule that can take our results from good to great. It's the most important rule in terms of execution. Only open a trade if the next day's opening price is higher than the previous day's close. All right? Very, 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 very important. This is a critical rule because it confirms the algorithms have started accumulating the shares. So, for example, look at what we noticed for stock ticker VST. On this Monday afternoon, the stock closed below our indicator. In this case, it closed at 26.12. In order for us to open a trade, we'd want to see the stock open higher the very, very next morning. Okay? And sure enough, on Tuesday, the stock opened at $26.18. That's clearly above Monday's closing price and a clear signal that algorithms have started accumulating shares. As expected, VST jumped back above market value as the algos continued to fire off. Anyone who opened the trade that morning would have seen a 107% return in just 4 days. $2,500 would have turned into over $5,000. And that's the beauty behind the A-line. We don't have to scour markets all day looking for different setups. We don't have to watch every market ticker. At the end of each day, we can see which stocks closed below the A-line. If it did, we know we have an opportunity, a real opportunity, with a near perfect entry positioning. As long as the stock opens higher, it means algos are firing off and it's game on. Like an example with Bank of America. On March 15th, the daily candle closed below our indicator. The stock closed at 38, excuse me. The next morning, it opened at 35.66. Once again, it was a clear signal that the algorithms have started accumulating shares. Anyone who opened the trade that morning would have seen a 115% return in just 4 trading days. $2,500 would have turned into $5,375. Now, here's the thing. You wouldn't have needed $2,500 to get in on the action. The cost to enter this trade would have been about $100. And that's perfect if you're just starting out or have a small account. If I was starting over from scratch with no software, no tools, and very little money, this pattern I'd be targeting to grow. This is exactly what I've been telling you guys. If I was starting out, this is the perfect place to start. The perfect place to start. Just like we would have seen with AstraZeneca. On May 29th, the stock closed below the A line. Had you been following our pattern, you'd know that there was a possible opportunity in the morning. In this case, the stock opened higher and it was game on, right? It was game on. Anyone who opened the trade would have seen a 250% return in just 5 days. And keep in mind, all these setups just happened. There will be plenty more just like them. Now, obviously, I'd never promise a future return or against losers, but I've got my eye on several of these A-line setups right now. And as soon as one triggers, I'll double check everything and post the trade details. It's all part of an initiative called the A-Line Alerts. And to my knowledge, it's the only research service that uses algorithmic accumulation to find worthwhile opportunities on a regular basis. Even in all the choppiness, our pattern has not lost one single trade since we officially launched the program in July. We were playing with it for 3 years, doing real trades, but we launched it in July. And since we launched it, we haven't had a losing trade. It's kind of funny. When we started selling it, we were promising people a 75% win rate. And so far, we've been at 100. So as I said, we've been misrepresenting things to you. I wish I had this problem every time. That includes a 50% winner on Squared that we just closed out about a week ago. 77% winner on FI that we closed out earlier in November. This is the actual spreadsheet. So if you go into the members area, you're going to be disappointed because this is what you're going to see. You're not going to see anything different. This is literally the spreadsheet. McDonald's 43%, BBWI 82%. I can't really complain. The problem is I can't make a profit factor because I have to have a loser to calculate profit factor. And I hope this is the biggest problem that I have for the rest of my life. Anyone who started with $5,000 when we launched it and risked just $1,000 would have been at $16,000, $16,517. It's pretty darn good, right? Considering it's been about 6 months. Outside of a few traders, very few have traded the A-line. Today, I'll be inviting you to join us for what I believe to be some of the best setups over the next 12 months. We've been red hot, and I intend to stay that way. If you followed my work in the past, then you know I am not blowing smoke. Let me just see. Has anybody posted anything nice in the Telegram channel? Oh, that's nice. Oh, that's nice. Oh, very nice. People are posting nice things. That's nice. Thank you, guys. I appreciate it. Thank you very much. If you followed my work in the past, you know I don't blow smoke. I'm too old for that. That's what a few of my top students have said about my various... I'm probably old enough to be Carolina's dad. Carolina, how old is your dad? Let's see. Carolina's here. That's a very, very sad thought. But I'm probably old enough to be her dad. Here's what a few of my top students have said. No losers over the last trades? Yeehaw. I have no idea what a loser is, Dom. I'm doing great. Started with 20K and have 80,000 in 1 year. Gary made 2,100 on Enphase and turned $1,000 into almost 4,000. Over 200% profit in 5 months. I've doubled my account in a month. And as good as those returns have been, my goal is to blow all of that out of the water. Each week, my team and I will look for stocks that close below our indicator. We'll use our rules to confirm algorithmic activity. It sounds like seismic activity, right? Algorithmic activity. And as long as the trade criteria lines up, I'll send you an A-line alert. Each week, you can expect at least one brand new opportunity. It all depends on which stocks cross our indicator and where the algos are firing off. For example, in January, we targeted the A line 4 times, winning all four trades. 2,000 into each would have paid out $3,575. Not bad. Huh. And that ain't bad considering we didn't have to do anything backbreaking to find those returns. You know, now, as you might expect, we'll be using options. It's what has allowed us to close such big returns in such a short amount of time. If you're new to options, don't worry, because I'll give you the exact option criteria for each trade. I'm not going to leave you hanging. I'll give you the ticker symbol. I'm going to give you the strike price. I'll give you the expiration date, and I'll give you the entry and the exit. I'm going to repeat this again because for some reason, everybody likes to ask me this question. I'm going to give you the entire option criteria for every swing trade we enter. Every trade is a swing trade, which means there's no day trading. I'm going to give you the ticker. I'm going to give you the strike price. I'm going to give you the expiration date. I'm going to give you the entry and the exit. I'm going to give you everything you need to place the trade. No guesswork, no confusion. You'll just have to read the alert and decide if you want to follow along. To make it as easy as possible, we're going to send everything to you via text, via email, and Telegram. Now, here's the thing. I don't want this to be your typical alert service. I actually believe this pattern can improve your relationship with the market and give you, and I'm not kidding, and give you a lot more confidence than you had in placing trades. With a little practice, I think you can master it. That's why I designed the A-Line dashboard to help you trade this pattern on your own if you choose so. Several of my traders use it. Rich was using it just the other day. Several other guys were using it. I get emails all the time. I love your dashboard. I love your dashboard. It's a great dashboard. It's a great way to start analyzing stocks. So if you want to start doing it yourself, this dashboard will help you do that. It includes the A-line indicator that you saw today. It'll show, it's all Thinkorswim friendly. It'll show you if the stock ATR is above 1. It'll even help you gauge the strength of the trend. It's all there. In other words, it has all the technical tools to follow my 3 stock selection rules and other ones that I'm not mentioning here. Stocks above $20, ATR over $1, and a nice, strong, mature trend. The same ones that helped us grow our portfolio by 85% per year over the last 4 years. I've also included a specialized scanner that'll point you towards all the stocks crossing through the A-line in real time. All right, with one glance, you'll know exactly which stocks to target. Now, I could easily sell that alone for $1,000. I'm not going to do that. I'm going to include it here. We'll have a link put inside your members area. With a few clicks, you'll be able to upload the A-Line dashboard to your Thinkorswim account. Now, of course, I wouldn't just send you this dashboard and wish you good luck. While I think you'll find it very user-friendly, I'd like to help you maximize its true potential. That's why all new members will be invited to a special A-Line Alert Masterclass. That's where we'll dive in. You'll learn how to use the dashboard and you'll learn how to use the A-Line pattern. And I'll go deep. I'll do a deep dive. And even added a special training wheels indicator that can help you clearly see your entry and exit points. Like I said, no monkey business. I've seen how eye-opening this pattern can be for both new traders and old. And like I said, this is the pattern I prefer to teach our employees. And as I mentioned, I'd love to teach my kids, but they're not interested. It allows them to target what could be hundreds of dollars each month, depending on their account size. Just recently, I gave the dashboard to one of our writers and taught him our pattern. Within first week of trading, he closed out 7 winners with just 1 loss. His average return per trade was around 23%, with top wins around 40%. And look, he did calls and puts. He traded both ways. Full transparency. He's not a complete rookie, but he's not an expert. He's a copywriter. He's not a professional trader. His experience would be matched with somebody like you guys who've been trading for a year or two. You know, nothing crazy, just casually messing around with the market. He'd tell you he's not much of a trader, but he's followed our rules and found several profitable opportunities. For example, look at his trade on Freeport McMoran. He placed a trade May 2nd. Next morning, it opened higher. For him, that was a signal to open the trade. 2 days later, he clocked out with a 25% gain. 2,500 turned into 3,125 smackarooskies. Now, obviously, I'm not guaranteeing you'll have the same success he's had. Everyone moves at different speeds and has different goals. But regardless of what goals you have, I think our dashboard can help you achieve them. Maybe to become a more proficient trader. That guy looks very happy. Look at that. Maybe that's to make more money. Whatever it is, I believe it could be much more attainable when you have the A-Line dashboard in your corner. Now, I'll be wrapping up in a moment, but I'd like to share one more detail about your A-Line membership. It's a way to leverage the A-Line pattern. It's the way to leverage this pattern to the downside. And I'll give you some examples after we're done here. You see, the algos don't just accumulate shares. They also sell them too. It's a two-way street, right? And that opens a totally new set of opportunities I call A-Line shorts. It works exactly the same way to the downside. All we've got to do is wait for the daily candle to close above the indicator, open a put trade the next morning, and close out anything the stock crossed above the indicator. In fact, we found several market examples that just happened, including Magna International, 69% in 6 trading days, Cardinal Health, 186% in 5 trading days, Darden Restaurant, 291% in 4 trading days. $2,500 into that last one would have turned into almost $10,000. And again, I can't promise future returns, and I'm not gonna do that. I'm not gonna do any of that. I don't play those games, okay? But that's a meaningful chunk of change, right? Meaningful chunk of change. Again, I can't promise future returns, but that's good stuff right there. That's money that can help replenish a retirement account, catch up on some bills, or maybe even cover a mortgage payment. And in some cases, we could have done it while the stocks are going down. For traders like us, that's a massive perk. It means we have the opportunity to target real opportunities regardless of which direction the market is heading into. So you won't just receive trade alerts to the upside, but also to the downside. In my opinion, I could easily sell A-Line shorts as a standalone service for $797. In fact, it was suggested to me by our marketers, but I wouldn't do that. My goal is to help teach you how to make money, not to take it from you. All right? And that's why I'm including these powerful setups with today's membership at no cost. Now, I've just showed you $2,500 turned into more than $9,700 in just 4 days. And with the type of potential, it's easy to see why the membership price starts at $2,297. That includes at least one A-Line alert each week, A-Line dashboard, scanner, the masterclass, the shorts alert. But today, new members can take advantage at a very special price. Our pattern has helped our model portfolio, and I mean this from the bottom of my heart, grow by more than 80% per year over the last 4 years. And that's why we're slashing $800 off the normal retail price. You're able to secure access for $14.97. What you do with the savings is up to you, but it can go towards your first A-Line trade. So if you're interested, you'll want to get your credit card out now fast, and here's why. In honor of our current win streak, I'm going to do something very special. In addition, I'm going to give you an additional year to our membership. I'm going to give you 1 additional year of trade alerts for free. That's at least 100 opportunities to target returns like I showed you today. Fair warning. This deal is only available until Friday midnight. If you try to purchase Saturday, it'll be too late. I'm going to say that again. This deal is only available till tomorrow midnight. If after tomorrow, it's too late. If you try to purchase on Saturday, no way. The train will leave the station. So if you're ready to get started and want an extra year on the house, post the link, Caroline. Post the link in the chat, guys. Get started. Get an extra year on the house. Go to rogerscott.com/ALA. You can click the link in the chat. All the details of your membership are on the next page. If you'd prefer to speak to a real person, call 904-404-8873. $14.97. You really are not going to get a best deal. And that's for 2 years. Administrator said to the downside, can we lose more than... No, you can't. Everyone who joins me today will automatically receive 1 extra year of A-Line alerts plus an instant $800 discount. Get started now. Stop playing around. I have several students who are making real money on a daily basis. $2,000 a day, $5,000 a week. I'm posting letters all day long on testimony. Not all of them, but I post some of them in my chat. You guys see it for real people. Some of them may be here today. There's an option for lifetime too, Jack. Yes, there's definitely an option for lifetime, but you got to go to rogerscott.com/ALA. It'll be presented after on your checkout, sir. Yes, there's an option for lifetime. Yes. The last 22 attempts at A-line, well, we haven't had a loser. I don't know how else to explain it. I don't have to sugarcoat anything. I don't have to hide anything. As a matter of fact, how many webinars start out with their spreadsheet? Usually that's like the last thing they want you to see, right? That was the first slide we had, our spreadsheet. We've had 22 winners in a row. So if you're serious about learning the pattern, today is the day to sign up. That's because I'll be posting the next alert in the next couple of days. Notifications will be sent via text, email, and Telegram. Cyrus, how are you? Now I have the thing open. I can say hello to you guys. To ensure you receive it, go to rogerscott.com/ALA. Cyrus, how long have you been with me? Forever? Jamal, the scanner doesn't... Hey, Matt, do we have A-line for TradingView? Can you check? I think we have it for TradeStation, right? Not for... We don't have the scanner. We have everything but not the scanner for TradingView. Now, it'll take you... But if you get lifetime, you don't have anything to worry about, Jamal, because the lifetime comes with a scanner for Stock Fetcher, and you can use that anywhere. I'm actually going to show you some examples right now. Now, I'll take a few questions in a minute, but first let me address some of the most common concerns. All right? Bob says, I love my A-line. Please repost all that stuff, Caroline. I appreciate it. How much money does it cost to take advantage of the A-line alert? Average entry is around $400. The common entry is like $200. Here's one, Bank of America for $128, 38% return, 128 bucks. Okay. Exit was 177. All right. Thanks, Caroline. I appreciate it. 177. Yeah. 38% gain overnight. How long does it take to enter the A-line alert? You know, Caroline, I just realized I've been trading longer than you've been alive.
Come on, Roger, don't throw me under the bus like that.
I'm throwing myself under the bus. You're young.
Say, you actually are throwing yourself under the bus. A lot of people are asking if there will be a replay, and yes, we'll send out a replay link later on.
There will be a replay. All right, so I'd say it takes about 60 seconds to place a trade. And remember, we give you the strike price, we give you the expiration date, we give you everything you need to place the trade. Absolutely everything you need to place the trade. There's nothing here that you would need not to place the trade, okay? No multi-step trades, no complicated strangles, straddles, condors, or butterflies. What stock can I trade the A-line pattern on? Any major trending stock or ETF. How will I know when it's time to close the A-line? Exits will be sent via text, email, and Telegram. If you haven't clicked the link in the chat, go ahead and do it now. All the details are in your next page. Now, once you submit your order, do not close your browser. I have a very special offer for you. It's a way for you to get access to the A-line stock code. Now, it will let you see every stock showing the A-line pattern across the market with one click. I'll actually demonstrate it in a few minutes. Cyrus, I haven't seen, would you answer? I haven't seen your question, Cyrus. I just opened up the chat. You got to give me a few minutes, please. Let me finish this, and then I'll gladly answer your question, Cyrus. This will let you see every stock showing the A-line pattern across the market with just one click of the mouse. Not only does this open up a world of opportunities, but you'll also have the chance to get it for free. Now, if you have reservations, I get it. Trading one pattern over and over seems illogical, but the numbers speak for themselves. As a matter of fact, you know what a definition of a professional trader is? Somebody who repeats the same thing identically 1,000 times. Now, remember, we've been sprinkling this program into our other services for a long time now, for 4 years, and the results have been really, really great. Average return on investment, well, 91342. You must live in Northridge. That was my zip code, 91342. You must live in San Fernando Valley. It's, I think, 38% per trade. But if you took $5,000 and you took $1,000 into each trade, you would have made 300% return in 7 months. So the numbers are really good. I wish I can give you a profit factor, but I can't because we haven't taken a loss. Bart, it's like apples and oranges. You can't compare the pit to the A-line. A-line is for people who have a life. The pit is for people who have a life but don't want a life. They just want to sit in front of a computer and trade all day. You see, Bart, the difference? It's a bridge. One gives you freedom. One takes your freedom away from you. See, if you want to have a life where you're free and you're roaming around and you're traveling, do you see? Okay, good. I'm glad you understood the answer. I'm just trying to be realistic with you because you got to understand. I have a lot of people who love sitting in front of their computer all day because that's just what they do, or they're traveling, but they're active. They love that. If you want to be on all the time, there's nothing better than the pit. But if you want to have a life, then this is perfect. And again, I'm just being as honest with you as possible. Okay. I'm just trying to be as honest as possible. Now, I can't think of many strategies that have averaged 85% return per year. The average trade here lasts 4, 5, 6 days. You understand? Sometimes 10 days, but no more than that. See, Rochelle says, I love to sit in front of my computer. I know Rochelle, I'm not even going to get it. She has everything. If after your first 100 days, you decide the gains, the insight is not what you're looking for, exchange it for something else. Call my team and we'll refund every penny of your membership back. It's all part of my 100-day money-back guarantee. All right? Nice and easy. Nice and simple. Nice and clean. If things go as planned, I wouldn't be surprised if you could cover the membership fee in just a few trades. Of course, I'm not going to make any stupid promises, but I've seen it happen many times with my different services. Like Dickens. I joined Stealth Surge for 1 year, and it paid for itself with my first trade. Dickens, it's still paying for itself. Richard, I'm not even going to get into Richard. Richard's account is up almost $300,000 since August 20-something, and Richard's consistently now making $2,000 to $5,000 a day. Oh, yeah, it's like that, and he sends me his results every day. This is from last March. Richard is way, way beyond that, and so is Ben, and so is Roddy, and so is Joanne, and so is Dave, and so are countless of other people, which I'm not even mentioning here. All right? And Rochelle, you must be doing pretty good too by now. Dwayne says, I've been in the pattern trader for the start. I have already made the cost of the program 5 times. Nice. So if you want to join, click the link. When you do, you'll be one step closer to joining some of the most successful students from across my services. After 100 days, what, Tim? What is the question? It's a 100-day guarantee. You can't get your money back after 100 days. That's what it is. Frank says, I've been trading it for 25 years and have never experienced something like Roger. I don't know if that's a good thing or bad thing. Just wish I would have come across him earlier. Thank you, Frank. I have over 100. There's Roddy. I just got a note from Roddy yesterday. Israel says, why only one alert a week if the market gives so many opportunities? Israel, because I'm very selective. Would you like me to be less selective and give you less opportunities and give you more opportunities? I could do that, Omar, if you want me to. I mean, oh God! If people still question if this is real or not, it is. I get stuff from right now, Tim. Today, when does payment due? Immediately. I held my DDOG option, and I am up 101% so far. Michael, 216% on Meta. You're welcome, Ronan. Let's see. And I'll get back to all the, let me just finish this and I'll get it back to all the other questions. Jeff says $3,917. Very nice. I like that. For contracts. So remember, the next trade alert should come out tomorrow. So to make sure you receive it, go to rogerscott.com/ALA. If you have remaining questions, I'll address them right now. Okay. So you get, for $14.97, you get 52, minimum of 52. And by the way, let me just answer your question without being a smart ass, Omar. The reason is because the market's been really challenging. If the market was much better, I would probably give 3 to 4 trades a week. The market's not been an easy market, and most folks know that. So I'm not making any excuses. I'm just saying that I've been extra careful because I want to give you guys the best trades possible. My job is not to help you, not to give you the most trades. It's to help you make money. All right, good, Omar. It says, yeah, it's not 365 days guarantee. Caroline, can you make sure they change the slide? It still says 365-day guarantee. It's now a 100-day money-back guarantee.
Yep, I can change it for you.
Oh, thank you. I appreciate it. So, yeah. And also, when you buy lifetime, let me show you guys something. I'm just going to, you see the stock fetcher? See, I have an A-line long and I have A-line short. I can instantly find A-line trades with one click of a mouse, and I'll give that to anybody who buys lifetime. And here's the low. Oops, sorry. And here's the low. And I have them both. Oops, went a little too fast. So if you want this as well, here's A-line shorts. So I'm always looking for A-lines. Here's one that's setting up TMO. Let me give you a couple of good ones while I have you, okay? And maybe Caroline can repost the link one more time. American Express doesn't look bad.